Welcome to the Aramir Roundtable. Today is the 14th of June, 2019, and I have a special guest, Scott Ruble from Stratagem Trade. So welcome back, Scott. I think this is the third or fourth time you've been on a roundtable.
Yeah, it's always great. You guys are like the best.
Well, thanks. And I know you have a disclaimer, so I'll just let you go through yours. But I've been following Scott for, I guess, almost a year now, and really been impressed with the style of trading. It's a lot different than, other things I've done. And Scott and I have come to an agreement that we're going to take his pot class and have a little miniature version of it at Aramir. So I'm excited to see all the details. So I'll be in the background. I'm going to mute myself in case our parrot starts making noise, but I'll still be here and help with questions and everything.
Okay. Well, you want me to just start now?
Yeah, go ahead. Thanks.
Okay. Well, welcome everybody, and thanks for logging in. I'm going to just explain to you the purpose of tonight's session, but before I do, I just have to give out the disclaimer. It's very similar to Tom's, but not as professionally and well done. Doesn't cover as much, but that's okay. We have really good lawyers. Just says we're giving out education, not advice. We're not tax advisors, anything like that. We do in our pod classes do a lot of trading, a lot of paper trading, etc. And so we show these examples, and we have to warn people that we are not using these examples for anything other than how trades can work under certain circumstances, and you're not to copy them. We do not offer auto trade, which is a big no-no on education companies. So in other words, we're acting solely as an education company. And I'll explain a little bit about who I am before we get started. Some of you guys probably already have seen me speak. Some here on the Chicago trading floors in about 1985, and spent most of my time as a member of the Chicago Board Options Exchange. And I left the trading floors in about 1996, 1997 to trade from home. And then I got a friend asked me to speak in front of a group of people for him one or two times as a guest speaker. Never done it before. Thought in semi-retirement it would be fun. And somehow I got hooked and into this business. So from there, I went to a company called Trade Secrets. I was also the head instructor at Optionetics. And then I started my own company, Random Walk, which later became Stratagem. Some of you guys may have seen me speak at Optionetics' big event called Oasis on the main stage. I've written a lot of textbooks, including the Broken Wing Butterfly manual. Been in Stocks and Commodities and Futures Magazine a lot. And converted Random Walk into Stratagem about 3 years ago because I separated from my partner and they went one way, which basically is bankruptcy court. And I decided to go a different way. I wanted to improve things and they wanted to focus on sales. And it was a just complete divergence of opinion and how we should work together. So we just decided to go, and I started Stratagem. I started on the trading floors, like I said, in 1995, 1996. And from there, initially I was on the Chicago Board of Trade, then moved over to Chicago Mercantile Exchange. And in the crash in 87, options all dried up on most of the floors except for the CBOE. So then I went over to the CBOE because that's the only place that was still trading options after the crash in 87. From there, I was in the bond futures pit, the S&P 500 pit, and mostly the S&P 500 options, which is the SPX and the OEX 100. Some of you guys have seen me in Stocks and Commodities magazine or Futures magazine. They've done a lot of writing about some of the books I've written in the past. And interestingly, somehow I ended up in Italy a lot. A couple of my students are big players over in Italy, and they asked me to speak over there. And we're getting as close to being as big in Italy as we are in the United States. And every time I show up over there, their equivalent of the Financial Times or Wall Street Journal and CNBC has me on the air. So it's pretty fun, actually. We actually have our own classrooms in Italy. But what we mostly do and who we are is what I outlined already, an education company. And our primary business model is we concentrate on three different things: books and videos, live classes. And I would say our most popular product is POT, which is Practical Option Tactics. And it's an online class we have every Wednesday. And it really is broken down into three components I'll explain in a little bit. And that's what tonight's talk is about. It's to talk about what Tom introduced as a relationship Aramir and we are having together, which is a mini version of POT, or POT Lite. So for the next 43 minutes, I'm going to explain what POT is. 15 minutes, I'm going to take some questions and answers that you may have. Then after that, I'm going to give you the worst sales pitch you've ever had, meaning I can't sell. The only thing I've ever sold in my life is option premium. And then from there, I'm just going to explain how you can get a free trial of this for 1 month. So let's get started, and I'm just going to go right into the meat of things because I don't have a lot of time. And what is a regular POT? Our regular POT is our weekly Wednesday night class we have every Wednesday night at 6 p.m. Central, and it lasts 90 to 120 minutes. And we cover a million different topics, and I would say we're different from other education companies in that we don't really focus on the basics. We assume that there's a million other companies working on the basics, and we go mostly from intermediate levels to beyond what the average market maker or floor trader understands. We do about 300 paper trades a year, and we enter into them, we manage them, we hedge them, and we exit it. So it's from alpha to omega. And it's every single trade we do, you see. So it's like some companies will throw out 50 trades and they'll have one great one, and that's the one you see. You see our stinkers and our winners. And that's a big part of POT. That's what a lot of people focus on, which is to get a big feel for what we're looking at under a whole wide variety of market conditions: bull markets, bear markets, fast dropping markets, markets where there's big news like the Brexit or the elections, that type of thing, and what kind and how the trades differ under certain circumstances. How are we dealing with the China tariff deal compared to the elections in 2016 compared to slow times? The other half of the people really seem to like the Wednesday night classes where it's more educational. They think, well, you know what, I got my own style of trading, but I want to learn more. And so between 3 to 6 write-ups per day go out explaining the paper trades we're doing and what I see in the market and what's going on and why I'm doing certain things. And then the other really half of what mini POT or POT is the weekly Wednesday night classes. So every Wednesday night before the class starts, we send out a link to people. And how it really works is we start each January 1st with a clean $100,000 account, and then just see what we do by the end of the year. And it's not really in the past been our primary focus of acquiring a large P&L. It's more been about learning traits. For example, a lot of my students are watching CNBC all day long, and they see these guys say, look, I see unusual activity in this name where somebody bought 30,000 calls. And I'll get an email, Scott, what do you think about these calls? And I say, these things never work out, okay? Because you don't know what the guy who's buying 30,000 calls is doing. He may be selling 3 million shares of stock short, thinking the stock is going to go down, and he's just buying these calls as a hedge in case he's wrong. But you know what? We'll go and buy a couple of them just to see what it looks like. And I know I'm going to lose money because it's only worked out once where I followed one of these TV trades and it worked out. So we never really focused on P&L solely until this year. Now, we take a very colloquial, down and dirty pit mentality approach to trading. And at the same time, we also look at a very scientific approach where we're always focusing on the Greeks. And I bring up my current Greeks all day long and say, this is what my current delta is. This is what my gamma is. This is what my time decay is. And this is how much volatility exposure through Vega I have. So every Wednesday night we have a class and the topics vary. And I would say probably 80% of the topics we discuss are what students write in and ask us about. They say, hey, you know what? Here's an example. I can't figure out why I'm losing money. And I'll write back and forth and I'll answer their questions in an email. And they're like, oh, I never learned how to do this. Can we have a class about this? And based on all the questions and comments and suggestions for classes that come in, we keep a total list of them all. And whatever the biggest concern for the students is at that given time determines what the class will be. Maybe I'll do an iron cockroach example, or I'll do a rolling thunder trade, and people are like, I don't know what that is. And so we'll have a class on that. And we try to go from intermediate to advanced to professional classes, and sometimes we'll throw in a beginner class, but it's probably only once every other month. But we try to diversify the learning scale so that even if you're lost because it's a little bit above your current level of sophistication, we try to osmotically pull you into a more advanced level. And after a few years of doing this, we think we found a really good way of helping people get to the next level of trading in a very organic, natural way, instead of just bombarding them with information and overwhelming them. How mini pot is going to be different is, instead of a class every single Wednesday, we're only doing 2 classes per month. Okay, one class is going to be our regular pot class, and they're all recorded. You can go back and watch them as much as you want for, throughout the year. Or you can attend live if you prefer to do that. Now, like I said, we have a lot of students in Europe right now, and 6 p.m. Central is a bit rough for them. So maybe half of our students just go back and listen to the recording when they have free time. We give everybody the choice. You can go and listen to it on live. You can go and just listen to the recording. You can do both. And then the other class we're going to have, which is going to be the 3rd Wednesday of the month, is going to be just questions and answers. And that's going to be unique for this mini pot with Tom. The second the second class is going to be just all questions and answers. And if there's a topic you want to learn about, just bring it up in the class and we'll talk about it. If it's something that is a little bit complicated or you think would benefit from an example, send us an email ahead of time say, you know what, Wednesday, I really want to learn about this. And that'll give me the opportunity to have maybe a couple slides prepared ahead of time that maybe will act as a visual aid to ease in the learning and make it go faster. Because sometimes a picture tells a better story than just a verbal explanation. So Tom and I are really excited about this because you're going to get a flavor of what the regular pot class is, which is a full-blown, heavy-duty schedule and $300 a month. But it's going to be a much more calm, laid-back manner with questions and answers that are more whatever you want to learn about and at half the price. So we cover a wide variety of topics throughout the year. This is what we've, just a portion of what we've done so far, the topics we covered so far in 2019. We've gone into Vipers and Rolling Thunders and dynamic hedging of collars, moving, as the stock moves, we keep adjusting the collar instead of just sitting there until expiration. Box spreads, condors, inflection points, a lot into skew, time spreads, whatever the students want. I mean, it's unbelievable, Tom, how we have found that there's so many people trading equity options, and there'll be long calls or long put spreads in an equity that's going into a dividend, and they don't understand the whole dividend process and how it affects options and when they can anticipate an early exercise in an equity option. And they just every expiration leave a fortune on the table without even realizing it because they're just long the spread and they don't exercise when they could have. So you see there's pretty much topics for everybody's personal growth, whatever you happen to be interested in or lacking at the time. And then, like I said, we send out about 3 to 6 updates per day with examples of what's going on, quick explanation of why the market is doing what it is that day. For example, last night, China had weak economic numbers and it's spilling over into the US markets. And because Apple has been determined to be a very sensitive stock to all this Chinese trade negotiations and tariffs, the stock got nailed by $3 and $3.50 on the open, which also helped drag down our markets. So I'll just give a quick explanation, maybe a paragraph of why the market is going to open lower or higher. And then whatever trade we're working on. And over on the left, you can see in the green thing, the green rectangle, how this particular thing, I'm just cleaning up a broken wing butterfly for a nickel. And I show an example of the trade. And we show every single trade because we don't know ahead of time if it's going to be a winner or a loser. And you see how we manage it, wiggle out of losers, adjust them, hedge, etc. So we're showing every single trade example, not just the winners, but everything. And I think that's pretty unique because a lot of education companies just don't want to show their human side, which is every trader has losses. The key to trading is minimize your losses and maximize your gains. Here's where we're at so far this year. Tom asked I put this up. We keep track of P&L every single day for the year and every single trade. And, we started the account with 100 and we're at about 190 right now. So I think it's pretty good for the year. It's better than most years. Most years we get about 100% return on average per year. Well, focusing on education, not trying to make money. This year we're focusing more on making money, and even with the down market, we're at about 90% for the year. So I think it's something that most students would strive for in this type of market. Now, some Wednesday night people are always wonder, what do you teach on Wednesday nights? Well, here's a quick example. We do a lot of risk reversals. And one of my books, risk reversals, under my pen name J.L.Lord, is pretty popular. So, but this year we're focusing a lot on rolling thunders because we've got possible war with Iran. We have China issues. We have tariff issues. We have the border issues. And there's a lot of things that could scare the market lower. And so I want to make sure we have adequate hedges on. And a rolling thunder is a way of getting very, very powerful downside protection for very, very little out of pocket money. And so last week, we covered some of what was going on with the rolling thunder trade, and I thought I'd share it with you guys, just some of last week's slides, so that you get a feel of what a real pot class is like, to see if this is something that would benefit you. So we started out the class, and we had just come across cleaning up a rolling thunder trade that everybody was writing. Well, everybody's a hyperbole, but I had an exorbitant amount of students going, this is the greatest trade ever. I love these things. Can we learn more about them? Because it did provide adequate protection. We were long 100 and some SPX deltas in a market where the SPX fell 150 points, and the rolling thunder ate up all the losses and then some, even though it was only a couple $100 investment. So really what we did is, on the 7th of May, we entered into the start of the rolling thunder with the purchase of a $20 wide put spread. We paid $490. Now that's a lot of money. That's $4,900. But it was a temporary thing. We're then going to spread it off. In the same day, we spread off half of the trade by selling a further out of the money $5 wide spread 20 times. So if you think about it, when I buy a $20 spread, I can make $20,000 minus the debit. Then I sell a $5 spread. If I sell it 10 times, I can lose $5,000, but because I'm selling it 20 times, I can lose 10,000. How that nets out is, if I buy my long spread can make 20, my short spread can lose 10. I can net make $10,000 minus the net debit of the trade on the way down. Well, that's still a concern for us. One of our biggest concerns is this. Every time you think you need a hedge, you go out and buy a hedge. What does the market do? The market usually bounces and you lose your premiums from your hedge. If you don't have the hedge, the market keeps selling off. If you do have the hedge, the market goes up. Isn't that that's how I learned how to trade, that no matter what I do, the market does the opposite. So one of the focus points on this rolling thunder spread is to get this down close to zero. Instead of spending $490 on 10 contracts times the 100 multiplier, which is $4,900, and that's a lot of premium. If the market goes up, your insurance is $4,900 and expires at the end of the month. Who needs that headache? Well, here, by spreading off with the sale of 20 contracts, we cut the premium risk in half. But that's still too much. I'm looking for my garbage can to get rid of this. Oh, here it is. Got to relearn the tools. When the market fell a little bit more, we had the luxury of being able to sell put spreads into it. And so now we sold off the last of our long put spreads that we could and turned this into, I don't know, my students like to call it a submarine or a shark or whatever, but it's just really a fancy condor. And once on, what's going to happen? The market's either going to go lower and this doesn't provide any protection, or the market's going to go higher and the thing expires worthless. And so we're constantly moving through this. It's called rolling thunder because it's not a strategy, it's more of a process. Then as the market fell, we were cleaning up the put spreads by buying call spreads because the call spreads were so cheap. It's the same thing. Buying a call spread is the same as selling out of our long, deep in the money put spreads to lock in the profits. And what that did is it took our upside from the zero line to where we could make a profit if the market went up far. Before we started buying the call spreads, the market was above 28.30 break even, but now we have potential profit above that. Now, what is the downside of this trade now? What our students will know, naturally start focusing on is any area of potential loss. And they'll say, well, I don't like this area. How do we clean that up? Especially when the market's falling, this is a big concern. Not only is this not acting as a hedge when the market's falling, it's actually adding risk. Let's clean it up. And so we would go through the class and explain what we did, why we did it, etc. And it leads us into the lesson of the day. What were we trying to learn? We're not showing off trades. We're using previous examples that are fresh in your memory as a learning tool. And so on this particular class, we had a lesson about buying tighter and larger quantities of call spreads than one big wide one. And we went into discussing that, and then we showed what happened the next couple days and how we unwound the trade. What the final thing is. On the left, you see we still have risk. So then we discussed how do we clean up that risk. And so we started talking about buying call spreads and selling put spreads, and then finally making the trade inert by boxing off all that we have on. And the reason we boxed it off is this trade came close to maximizing the most amount of protection that it could possibly give us. So if you're near your maximum profit, why have the trade on? The only thing that can happen is the market can have a surprise move against you and you start giving back profits. And so what you see here is a box spread. I don't know if you guys are familiar with the box spread, but you see here, let me pull up my drawing tool. We've got four corners here. This is a box spread. It's essentially a riskless position. We're long a call spread, we're long a put spread. No matter what happens to the market, it doesn't matter, because if the market goes up, our long call spread makes its maximum. If the market goes down, our long put spread makes its maximum. If we close in the middle, the long put spread and the long call spread share the profits. It's in a riskless position. And the only reason we did it was to clean up all the profits from the trade. And so how we went on to explain how we got that left side close to the zero line. And then as the market started making money, we brought it up and we started locking in profits before we turned it into a box. So we eventually turned the trade into a guaranteed $6,600 profit or more, depending on where the market closed. And again, I'm not teaching you the strategy right now. We don't have the time for that. I'm just showing you and giving you an example of what we go through in the class and how it's really step by step with criteria so that you can replicate it on your own. And then we go back to our goals for the year. And I reiterate that we're really sticking within the goals that the group conscious decided at the start of every year. At the start of every year, everyone tells us what the goals are. We vote on it, and that becomes the subject for that for 2019. We'll be doing it again for 2020. And this year, people wanted to focus on more protection to the downside for crashes. They wanted to see the account make more than 100%. And by December, they want to see one class all day long of me just scalping deltas to get an understanding of how market makers are always flipping cards back and forth. They're not long, then they're short, then they're long. So I'm going to have maybe next month a class all day long where people just watch my computer screens all day, and I just talk out loud what I'm looking at, what I'm doing. I'll maybe have one of our other traders, Robert Chastain, come in, or Terry Houghton come in and explain what they're looking at all day long too. But what you see is that green line is where we close the trade out. It's a flat line. So now we learned what a box spread is in that particular class and what it looks like after everything's cleaned up. And we finalize every step of the way. Step A or step 1 is we entered into the put spread. Step 2 or B, we sold out this put spread. And we go through every single example until we figure out what the final P&L was. Now, this was a fantastic trade. It just so happened that we were talking about it last week. Last night, we were talking about a trade that didn't do so well. We were looking at a possible $8,000 loser, and it ended up being a $3,300 or $3,600 loser because we were adjusting, and I consider that a win. If you're looking at $8,000 loss and you can turn it into a $3,000 loss, that's still a valuable lesson because we're always going to be dealing with losses. They call it trading. They don't call it making. So then we also give a lot of classes about what strategy to use under varying volatility conditions. We focus a lot on volatility at Stratagem. We understand that there's a good portion of people that have stock in their retirement accounts and like to also use deep in the money calls to simulate stock. Well, we've seen a lot of companies teach using a deep in the money call to replicate stock, but teach it completely wrong, where they're putting the odds against themselves. So we're teaching people the correct way to do it, or one of the correct ways of doing it. Ways to sell premium, the different strategies you can use. And then we always go back to the updates. And this is really a benefit because 3 to 6 times, sometimes 9 in really, really busy days, but we make that an exception. I try to keep it under 5, really. Yesterday, I think we did 3 because it was a quiet day. The day before, we did 3. A lot of it has to do with market conditions. When the market's moving 500 points a day, people like to be kept up to date on what's going on because there's so much confusion going on. And so we'll make a concerted effort to show more examples of how to trade in volatile situations, but also what's causing all this volatility and what strategies you can be excited about when the whole world is panicking because the market's falling apart. We've got trades on that we'd love to initiate, like the Vipers, which is a short volatility position that's hedged, that we'd like to put on. We pray for down 500-point days when everyone's panicking, because that's an opportunity for us to enter into a Viper, which is probably the best trade I've ever seen. So then we go back and are always keeping track of this. Where are we making money? Where are we losing money? What did the market do that day? What could we improve on? And it becomes a continual education thing. Now, let's go into this. What is mini pot? What does it cost? What are we going to try to accomplish in mini pot? Again, it's going to be 2 classes per month. The first and third week of every month. And I just thought of doing the first and third week so that it's easy to remember. And the first week is going to be our traditional pot class that we're doing with the full-size pot. So you're going to be in the same class or watching the recording of the regular pot class. It's usually about 90 minutes long. And it's in a similar format to this. And every week it's a different topic, different strategy. And then the third week is going to be the Q&A. And if you guys want, we can make, I always let you guys tell me what you guys want to learn. Okay, I don't just say, here, this is what I want to teach, so you got to take it. This is designed for you guys. So if you want to send in a question, say, Scott, I got this stock, I was long this call spread in Apple paid a dividend, and the next thing I know, I'm just long naked calls and short stock. What do I do here? What happened? How do I anticipate when I'm going to be assigned on a short call? We can have a class about that. I'll make some slides and explain what was going on and explain how you could have anticipated that call was going to be assigned by looking at the corresponding put and comparing it to the dividend and know which options are going to be exercised or assigned, and have the slide already so that when the class is over, you actually have notes. And this is really cool because you're going to be getting 2 classes a month, one of which is anything you want it to be. The other thing it's going to be is 3 to 6 updates a day, just like regular pot class. You'll be getting the same updates and everything. And you'll be seeing the same examples that we're doing in regular pot. The great benefit is you're going to be getting everything as regular pot, but for half the price. The only difference is you're going to be getting less personal attention and half as many classes per month. You'll be getting 2 classes instead of 4 classes per month. But Tom and I talked about this ahead of time and thought, this is a great sweet spot thing. It takes the best of everything in the regular pot class and cuts it down a little bit in terms of volume, and cuts it down a lot in terms of price. It's only $149 a month. It's the only thing I'm worried about is cannibalizing myself, in that I have a lot of people that may be into full-size pot paying $300 a month that say, hey, I'll deal with a lot less classes to save some money. But what I've found in the past is anybody that usually participates in our program usually upgrades instead of downgrades. So I'm not really too worried about it. So what we want to do, and Tom, is working as your guys' advocate. So let's give everybody here a free 2 weeks, 3 weeks, 4 weeks. I'm like, that's fine. I'll give them 4 weeks free. Everyone listening tonight can get a month of pot for free. Okay, that's 2 classes, and you get to see all our paper trades that we're doing for that month. You get tally sheets and everything, so you can see how we're adjusting current price on trades, etc. And see if this is for you. Now, I forgot to ask Tom, what's the best way to enroll in this? Do you want them to send a request to info@stratagemtrade.com or to you, Tom?
Either way is fine. Since it's dealing with your pot for that trial, you're talking about the free month or the full pot, right?
The mini pot.
Oh, the mini pot. Oh, I've got a
Right.
URL. It's aramir.com/mini pot. I'll put it in the
Here, I'll write it
chat.
down. Let me see if I can.
I just put it in the chat for everyone.
Oh, okay.
And actually, I think most people are signed up already on the webinar.
Wow, you guys are way more proactive than mine.
And Constantine asked about will it overlap with the Elise course? No, it's different. This is completely different. We did have some questions if you are ready for them.
Okay. Great question came in from Tim. Says he's not clear on the 300 paper trades per year. Let me elaborate on that a minute. And how we deal with the paper trades is myself or a couple of the other professional traders from the floor. Well, actually, Robert was never on the trading floor. Robert actually was a fund manager, and he managed Thinkorswim's fund, and then left there because he was given an opportunity with Merrill Lynch, and I think he was managing 300 or 600 million dollars of their derivative portfolio. But Terry was a floor trader with me. Basically, we take the approach of what would a floor trader do in the situation. The market's at 2,900, just under it. We're getting a little volatile. We got a lot of news going on. We have oil tankers in the Strait of Hormuz that are getting hit with torpedoes or landmines. There's a lot of uncertainty. President Trump is tweeting out 3 times a day, I love China, I hate China. There's a lot of uncertainty going on. There's mixed signals going on with the economy. It's slowing, but they might lower interest rates. Then again, they might not. What approach would a floor trader take in trying to make money in this type of environment? And we'll show some examples of what we think would be a good trade to take advantage of the current market conditions. Then each trade is looked at 2 different ways, in its individuality and as a portfolio as a whole. We may have the 20, 30 trades on it, really busy times. When the market's falling 2, 3, 4, 500 points a day, you can't look at each individual tree and still keep track of the forest. So we back off a little bit and look at the entire portfolio and say, here's my total risk of everything. Here's my net delta, gamma, theta, vega. If I want to hedge this entire portfolio, what would I do? And that gives us the breathing room to then look at each individual trade. And from there, we say, okay, this thing is starting to lose money. How can I spread this off or close it out before it becomes a bigger headache? Here's one that's making money. How can I take some profit? And here's an important thing too. A lot of people get out of winning trades too early. The mentality is, well, I bought this for $1. It's at $1.50 now. I'm afraid I'm going to give this back. It's going to go to $1, maybe 90 cents. And I'm going to give back all my profits and then some. And they close out the trade too early. And that's just as dangerous as letting your losers go way against you, in my opinion. And so we also show, hey, here's a way of taking a lot of the profits off the table, a lot of the initial risk or premium off the table, but leave on something that can still make more money. So from there, we look at all the trades from initiation to managing it to maybe hedging it or spreading it off to finally closing it. And throughout the day, I may send out 2, 3 updates. Hey, you know what? We're long IBM. We hedged it yesterday when it got up to around 196. Now it's back down to 191. What do I want to do? Well, maybe I want to get long deltas again. Maybe I just want to close down the whole trade, etc. And maybe I'll turn this vertical spread into a butterfly or into a condor. And that's what comes out in the updates. If some news has come out, apparently just a couple minutes ago, Trump said some tweet where he doesn't care if he meets. I didn't see the tweet because I'm teaching a class, but it came across my other screen real quick, and I just caught it that he's not really concerned if President Xi shows up at the G20 or not. If the market moved based on that, I'd say, hey, you know what? We just had consumer sentiment come out, or President Trump just tweeted this. After that, the market did this. My opinion, whether it's right or wrong, I may say, hey, you know what? We sold off 10 SPX points based on this, but I think it's just a knee-jerk reaction, and by the end of the day, it'll mean nothing. And then we'll go on to the trades. From there, another question came in from Sean that says, from the mini pot, are you starting with a new fresh $100,000 account, or are you continuing with the pot portfolio account? We're just going to continue with the current pot account. And the reason for that, and don't take that as a negative. Some people might say, well, you know what? They're in the middle of a whole bunch of trades right now. Yeah, but these trades expire in a week in a lot of cases. And where the benefit is to you is you can already fast forward. Hey, this trade was put on 2 weeks ago. It's causing us problems. What are we doing with it today? And within 2 weeks, most of everything you're looking at in your month free trial will be completely new anyways. I would like this, in some part of me would like to start with a clean, fresh account, but my guess is it would get very complicated from our company's perspective, and having 2 different accounts with 2 different sets of trades and sending twice as many updates out. And B, it eventually would probably end up merging into the same thing as the original pot account, because if I liked this Beyond Meat trade for the full-size pot class, I'll probably do it in the mini class too. If there's something that's standing out in Beyond Meat that has me attracted to putting on a short delta position, because I don't think Beyond Meat should be trading for a higher net valuation than 75 of the 500 stocks in the S&P 500. I'll probably want to do it in both accounts. So it'll probably meet or merge 2 weeks. If I started a new account right now, it would probably merge together with the regular pot class in 2 weeks anyways.
Well, another thing too is the margin used in the accounts maybe 20%. So it's a $100,000 account, even if it's a 190, you're not even using about 40,000 or less of margin.
Yeah, I mean, I can show them right now. I mean, here's the account right now, right? It's at 189,000, and we're using, very little. We still have 155,000 buying power. I don't think I've ever gone above 50%. I'd like to have a lot of cash laying around, because if the market crashes for whatever reason, I don't want to have my hands tied on what I can do to adjust. B, there's always so much opportunity that I don't want to be limited when the one day out of every 3 years or out of every 5 years, we had the most opportunity in the world, and I've got my money tied up on 20-cent wide call spreads or put spreads. And I used to tie up a lot more money. I used to go way over 50%, closer to 75%, but that's when I was running a lot of collar positions with actual shares of stock in the account. Now most of my students don't want to trade the actual shares. We have a position on in an Apple collar where we're not buying Apple shares. We're using a far out in time long call to replicate the stock. We have a deep in the money call to replicate the stock, but it's trading for 25%. That call's trading for about 25% of the value of the stock. So it's eating up a half to seven, more of what we would be tying up if we used actual shares.
Okay, we have a bunch of questions. Let's maybe scroll back a little bit. Let's see. So Eshu asks, so Rolling Thunder is effectively legging into a condor, but to leg it at prices that make sense is obviously relies on the market going in a favorable direction.
Correct. That's a great question. Okay.
And then he had a part two to that. What happens if we move in the other direction immediately, or are we assuming we're not long delta in the rest of the portfolio, so we accept loss of premium paid, and we hope the market doesn't simply stagnate where the theta decay would hurt the most?
That's a great question, and you can tell this guy's at a pretty sophisticated level himself, okay? Because he's already asking like the main guts of that trade.
Right.
And I would say probably 50%, if I want to be honest, of all Rolling Thunder trades we're legging into are done at a time when we're long deltas, but we use it like a scalp. We approach it from a scalp mentality where we're legging into, and it can be done in a stock. It could be done in a big stock like Google or Amazon the same way, or it could be done in the NASDAQ or something else. But doing it in the SPX, we'll use maybe 2 strikes or 3 strikes or 4 strikes as our stop loss, depending on market conditions. In a very slow moving market like we've been seeing the last couple of days, I'd say I'd use 2 strikes. If I bought a put spread right here and the market got back to like unchanged, that's when I say, you know what, I'm not going to take this $5 put spread and watch it go to 0. When we get 2 strikes against us, then I'll spread it off and turn it into something else, a butterfly or something at lousy prices. And then later on, we'll try to wiggle out of it for, some other way. So we'll take a trade and turn it into a slightly bad trade and then figure out how to wiggle out of it later. And sometimes you just can't. We do enter these Rolling Thunder trades typically only on days where there's market weakness or the market seems to top out, okay? A great time in hindsight, because you guys are watching the markets, would have been when we hit 2,910 or 2,900 recently. That seems to be a big resistance number. Every time we get to 2,900, if you bought a put spread, you could have this thing go 3-4 strikes in your favor in a day. And then you just spread it off. But even then, if you spread it off at great levels, you're sometimes into it for a debit, depending on how big the sell-off is. Sometimes we get them on for credits if we ride it on one of those days where we're down 300 points. But we're still into it for maybe a debit, and then we sit there and tweak it and we play with it. So it's as I said at the beginning, it's a process. It's not just a legged condor. Okay, that would be an oversimplification. Once the trade's on, we keep playing with it to take whatever risk or of either real market risk in terms of market direction risk or premium risk and clean it up. Here's one trade. Let me go back to where I was at before. Here, this is one rolling thunder trade. Now, this was pretty aerobic. Okay, this was a pretty proactive trade that we usually don't do as many adjustments, but it was working out for us. So we probably traded this twice as much as a normal rolling thunder trade, but we just didn't throw on the condor and hope the market closed between the strike prices that we like. If it goes to the left of the condor graph, we'll clean up the long put side. If it goes to the right, we'll clean up the short. And we're always adjusting it. So it's more of a process than just legging into a condor and then hoping the market cooperates by closing at the ideal price.
And on the screen, if you can leave it back there, one of the questions was, Sean asked, sounds like day trading, how much time am I expected to stay in front of the screen? If you look at the dates, the first couple trades were the 7th and 8th of May, and then there wasn't anything until the 31st of May.
Correct.
So it's not just constant day trading.
No, well, we divide up the pod trades into really 4 categories. Normal pod trades, which is really maybe I'll put on a trade today and then hedge it tomorrow type thing. Then we have fast trades, and we call them fast, okay, which means it's a leg, it's a scalp. We do less than 10% of our trades as that, but there is a certain portion of our students that have the day trading mentality. They like the action. They think that they can time the market on an intraday basis better than they can 3 weeks out in time, and want to see examples, especially near an expiration, of great risk versus rewards. And you'll see us do some of those. Then we have trades called light trades, which is long to intermediate term trades, where it's more for very busy individuals, people that like to trade and like to trade options, but have a real job and can't be watching their computer all day long. And so we'll put on a trade and maybe not touch it for a week. And the trades are purposely designed and set up initially to withstand daily P&L swings that we don't have to panic out of. And so we may put on a trade, today and not touch it until Thursday and next week, where it's a good time to hedge it. And then we'll leave it until we get for another 2 weeks until we get close to expiration. So over the course of 2 weeks, it'll be 2 or 3 trades. It's a very type B personality type trade. So we designate in the updates, and I got to get more. I myself, when sending the alerts out, could probably improve a little bit in terms of letting people know ahead of time, is this a normal pot trade? Is this a long-term trade? Is this a fast trade? I think I do a pretty good job, but you can always improve, so that when the text comes into your phone, that an email's coming in, you can just look at the text and say, oh, this is a fast trade. I don't care about this. I don't have time to be buying a spread and then selling it 20 minutes later and then hedging it 20 minutes after that. I just ignore it. Or I see a text come in and it says, oh, he's entering into a new collar trade in this name. I love collar trades. This one I will, drop what I'm doing and actually look at. And I think that's one of the benefits that I learned from the students, that everybody in here has got a different amount of time that they allocate to this, a different patience level in terms of how proactive they like to trade, etc. And so we kind of compartmentalize or pigeonhole certain trades, and our students in the normal pod class, the regular pod class, said, okay, I found what they liked. Some of my students just are always begging for fast trades, that they like the juice. And then I have just as many people on the other spectrum say, hey, can we do more long-term trades? Okay, I'm going on vacation next week. Can we put on a trade now to take advantage of, like, I don't have to worry about this while I'm on vacation for a week. So hopefully that answers the question. It's a diversity, and we let people know when entering a new trade what category it's going to be so they can avoid it if they
Or
don't want
jump
to
on.
participate.
Yeah. And Marcus asked, why do you keep strikes for 5 cents in a box?
Why do I keep strikes for 5 cents in a box? I mean, why would I box something off for 5 cents as opposed to just closing it out?
Right.
That's a great question. Personally, I would rather close it out. Okay, why leave stuff on? There is a reason why I box things off, and that is, and usually if I've got time and the market's not real crazy, I'll go into a full length explanation, where I would probably just sell this trade out normally, but I'm going to box it off instead because we're going to be coming back to look at it. In other words, let me find something here real quick, and I can explain it better with something.
Well, another reason could be the bid-ask spreads and in the money might be out
Well,
of control.
yeah, I mean, you have a liquidity issue for sure, right? Especially in something like, if we are stupid enough to play like one of these illiquid stocks, sometimes you come in the liquidity issue where the deep in the monies, nobody wants to even look at or trade, and the bid ask is so crazy. But here's a great example. Last week, or at the beginning of the week, let me get my drawing pen up here. Let's ignore this, okay? Earlier in the week or last week, I think it was earlier in the week, when the market was at around 2910, it was greater than 2900. We hit on this long SPX call spread at the 28.45 55 strike. Okay, we've been riding it for a while. Okay, this was way out of the money when we put it on for a couple bucks. Now it's approaching $8 with 2 weeks to go to expiration. The market's at above 2,900. Do you want to keep this thing on to make the last $2 or not? Well, some people would, some people wouldn't. I decided I would rather clean it up in case we pull back, at least lock in some of the profits, and put on a trade that's got a better risk reward ratio than what it is right now. If I have a $10 call spread and it's trading for 8 or more, I'm risking 8 to make the last 2. So I could just sell this out at 8 and be done with it. Or what I'll sometimes do is buy the put spread for $2 to turn it into a box so that when we talk about it in class later on, this is still in the account and the students can see it. why what we've been doing a lot of, and again, let's ignore this. Don't let that distract you. Is instead of buying this and turning it into a box, what I was teaching to students when I hedged this is instead of this $10 spread, I can do twice as many $5 spreads. And so why not buy this $5 spread 20 times instead of a $10 spread 10 times to box it off? And then what I have on is an opportunity to make more money should the market get down to 28.50, 45 area. Well, what we noticed is for a nickel more or 10 cents more, when these things were $50 in the money, these put spreads were a lot further out of the money. They were $30, $35 further out of the money at the time. We could go up one strike, and instead of buying the 55.45, we could buy the 60.55 for a nickel more. And what this creates is really synthetically a giant butterfly for a nickel at 28.50 area, which has been a huge support resistance number. So I said, you know what, let's do it this way. And by keeping it in the account, we can visually track it. And to tell you the truth, when we were looking at that previous slide earlier, you see that we did that, in this trade. We weren't cleaning up the exact same strikes all the time. Okay, we were nudging strikes in our favor or against us. Here, let me get my pen out. Here you see we bought 30 call spreads that were $5 wide. Instead, to hedge this, where's the put spread? This put spread. Instead of buying a $15 or $20 wide call spread, we did 3 times as many $5 spreads. And guess what? By doing that little thing, which cost us, I think, an extra $200, it ended up making us an extra $5,000 on this particular trade. And so what we try to teach at Stratagem is little nudges and alternatives that are deviating from a clean trade, but little things that we as market makers learn make a big difference over the long run. So instead of just closing out the put spread, if we can, for the same amount of money, turn this into a 3-legged box or turn it into a regular box so that at least it's in the account and we can see it as a learning tool, we will. Now, if I'm just going to box it off, there's no difference between turning it into a box or just closing out the long spread. In reality, I would just close out the trade. You're absolutely right. But so that we can keep the thing on for educational purposes, I box it off. It does a great job as a learning tool. And considering we're not using that much money, keeping the box on for a little while doesn't really affect our buying power. But we tell everybody in the updates, personally, I would just rather close this put spread out. Instead, I'm buying the call spreads for educational reasons. I think that's about as long of an explanation on a short answer I can give you.
Yeah, there was a couple. There's more questions. Peter
Okay.
asked about how much risk does this take? Is it portfolio margin? It looks like I think just Reg T is fine.
Yeah, yeah, that's pretty much what we're using.
Let's see. We go back up here. What percentage of the trades is on stocks versus indices? And thinking of broker commissions here, Tasty Trade versus IB.
Okay, I'm not real familiar with IB. I mean, I had an account with them. Um,
I trade with them. Their commissions are pretty good.
no, their commissions are great. Um, what I didn't like about them is that when there was a problem, I pretty much would have to catch an airplane to their offices to be able to talk to someone.
Yeah, I just use the chat. That's the best way I've found. But yeah, they're definitely weak on customer support versus like Thinkorswim.
Right. And another reason why I use Thinkorswim is they were the first ones to allow butterflies to go at margin of what a real butterfly margin should be, and they didn't. Whereas IB was still, looking at it as a long spread and a short spread separately, and a 10 contract butterfly for in the SPX for a dime, which costs you $100, they would charge you $5,000 in margin. But I'm also friends with Scott Sheridan and Tom Sosnoff, who started Thinkorswim, so I got used to it. But like I said, we have a lot of students in Europe that can't use Thinkorswim. Thinkorswim isn't allowed in Europe. Not allowed in Canada. And so a lot of my students use IB or one of the other brokers, and that's fine. It's just got to pick one.
Let's see, there's another question about sending the emails to MiniPot. We have to work out the logistics. I think I'll probably work with Glenda and get a current list to her, or use the API to keep it current or something.
Yeah, I'm not smart enough to know how to do that.
Yeah, I'm probably the one to help do that.
Yeah, I just send it to the group of people I've got in the office. Usually Paulo, and then if there's a problem, he gets Glenda. So maybe Paulo is who you want to talk to. Ask Glenda; she'll know.
Yeah,
Um,
we'll figure it out.
but like I said, Italy, they don't allow Thinkorswim, and a lot of my students are in Italy. I got a lot of students in Milan and Rome, and um,
We have a lot in Germany and the UK.
I've got a couple in Germany, but not many. Is like Italy, and they're all using IB.
Let's see. Jeff asks, what are your typical profit targets for Viper trades, and what expirations do you choose for the Vipers?
Um, well, that really depends on what's going on and what's causing the volatility to increase. Um, is the spike in volatility because of a known unknown event? Meaning, we know this event is coming up. We know the G20 is coming up on the 28th and 29th. If volatility starts spiking because of that, I want to choose my expiration where I've got a couple days after the event that is causing people fear, in the same way that going into earnings in a stock, volatility goes up. Once the event is over with, there tends to be an exhale of tension. Volatility comes in, and I want the gamma, the profit from it as soon as possible. So I'll time it close to a known unknown event. Elections are a great example. We know when the elections are every year. I will have the trade on maybe a week after the election. If it's because the market's falling apart and we don't know when the chaos is going to end, I nudge it further out, maybe 30 days. There's a revision to the mean, and I can get real scientific, but I don't have the time about how to anticipate when the market's going crazy, how long it takes on average for it to calm down and stuff. But suffice it to say, I'll push these things out to maybe 30 days out in time, which is almost always ample amount of time for the fear to dissipate and the Viper to kick in.
Okay, let's see. Greg asks, how are we notified of adjustments at P&L? Is there danger in cherry picking? I think the notifications will be via the emails that you send out.
Correct. That's what the updates are. Right? And cherry picking, I'm a little bit, I think I know what he's saying, but I don't want, you mean front running and that type of thing? Or people just picking certain trades? I'm not sure what's being asked with that one.
Yeah, I'm not sure either. Maybe, Greg, if you could expand on that a bit. Let's see. Next. Oh, Jed Clampett, great name. Might you be open?
I think that's a real name.
Oh no, I know who it is. It's not. I'll tell
An
you about
oil
it later.
guy out in California with a swimming pool, a cement pond.
No. Yeah.
I know his daughter Ellie Mae.
Yeah, and Jethro, yeah, and Granny. Might you be open to using Option View or Option Explorer so you could show or superimpose the proposed adjustments or the impact adjustment on the current campaign? I don't think you use either one of those. You're just using TOS, right?
Yeah, and I do when I've got time. I try to give as much explanation as possible. Market conditions, and you've seen this, Tom. You've been doing this for a while.
Yeah.
If the market's really cooking, I just get it done. So I don't because wasting 20 minutes may mean 300 Dow points. But if the market's dead like it is right now, where we're just down 10 and sitting, I'll pull up the charts and take a snapshot of before and after pictures. What the graph looks like before the adjustment and after the adjustment. You've seen those before.
Yeah, and I'll see if I have time to maybe put some of these trades in Option View and put them in the forums for you guys. I don't know how much work that would be yet, so I can't promise it, but I'll take a look at it. Manuel asks, is it possible to have help for understanding for students not good in English? He's Italian.
Right. You know, Tom, we're going to have to talk about that because I have a partnership with some guys in Italy because I don't speak Italian. I barely speak English. You know, I was a science major in school, so to avoid having to learn the I before E except for after Y stuff. But let me think about that. I have a pot class in running in Italy where I've got guys translating everything to Italian. You know, you and I can probably work out something, Tom, where we just kind of nudge him into the Italian class if he prefers.
Right. Yeah. I'm sure we can figure it out.
You know, I also have a clerk, Frederico, who, you know, I've got a couple clerks, you know, mostly Glenda because, you know, she's my front person.
Right.
Someone's got to be able to see the whole picture other than me, and then we compartmentalize job duties. But I've got a guy named Frederico in Italy. He's lives in Rome and just trades full time and sort of like an apprentice. That works with me that helps me out in these situations too. So I got to ask your permission on everything. This is your swimming pool. I don't want to pee in it accidentally.
Yeah, we can talk about it.
But
we'll figure something out.
Always put him with the Italian group, which may, you know, benefit him better. It's the same trade, same everything. There's just a little bit longer of a delay because everything gets translated.
Right. Marcus asked, will the trades be posted on Slack in real time? If you post them through my system, we can do that. Otherwise, I can maybe do some coding to help you set it up at Stratagem. But it depends on how the trades get posted. If you're just sending out the emails, then initially no, but we can probably figure something out.
Let me answer this question here.
Okay.
Okay, I got a question from a guy named Robert Chastain who asked, is it true
Oh,
that Robert Chastain is the best trader ever?
hey, Robert.
In his opinion, he is. And in my opinion, he's pretty darn good. Um, you know, I've gotten to know Robert for, I don't know, well over a decade now. And, I started at a think tank that most people haven't even heard of, but we were the first ones to like break apart volatility and be able to quantify it back in the, when nobody even could measure it. We started with a couple $1 million loan from the O'Connor brothers, who are depicted in the movie
Trading Places.
Trading Places. And 10 years later, we sold 10% of the company for $1 billion to Credit Suisse. I mean, and literally Fisher Black was working with us at Black and Scholes, and I was like the only guy who couldn't even spell MIT, let alone having attended it there. It was all MIT guys. And it was a giant think tank. And I was the dumbest one there, but every company needs a mascot. And so I would have had the benefit of being taught some very sophisticated things that most of the world still hasn't even caught up to. And so I can get, I feel very lucky to have been there and feel pretty confident in my trading knowledge. And when I don't, I know a lot of traders who are better at certain things than me, right? I mean, I spent time in the bond pit, but if I wanted to teach a class on heavy duty bond arbitrage techniques, I'm going to get one of my buddies who's a bond trader to teach that class. I defer most of my classes to Robert on certain strategies because he's better at it than me.
Okay, let's see. A couple more questions. Greg said for the cherry picking, he meant picking certain trades versus all trades. Yeah, you can definitely do that.
I'm sorry?
Oh, he said the cherry picking was referring to picking certain trades versus picking all of the trades.
Oh, um, you know, obviously when you have 20 different trades on at any given time, 30 different trades on at any given time, you can't P&L. Well, if I did 1, 3, 5, 7, and 9, this is what it would be. If I did 2, 5, 15, 18, and 30, this is what the returns would be. If I did one, just odd number trades, it would be this. If I just did just an infinite number of very possibilities.
I think the way you'd have to do it is based on the type of trade, like a fast trade or a light trade.
Right. What I was going to say is I've had some students that get really volatile P&L swings because they only want to learn or trade a certain strategy. Call it BWBs. And it deviates greatly from what my returns are going at the time. Then I get some people that, like you said, only want to do light trades or, are really focusing a lot on the fast trades, or some just want, certain strategies. And so their P&Ls differ from mine. Mine is obviously the whole universe of what we're showing. But for those students who have deviated and chosen their own little like subsection of pot that they want to focus on, we make it very clear that keep track of your deltas, gammas, thetas, and vegas. And I talk about that almost every single day. Here's my delta. Okay, I'm currently long 100 SPX deltas. And this is what I'm using to like hedge it. And if you're just focusing on a certain subsection of the account, your deltas are going to vary, and adjust your hedges accordingly, and you should be fine.
Simon says, are you recommending a realistic account size to trade this approach live? I mean, $100,000 account trading SPX would be almost the same as a 10,000 trading SPY, just with different commissions as a percentage.
Yeah, and we originally started with $100,000 because of the student's recommendation. You know, when we started this, I'm like, well, what count size should I have? And some students said 10 grand, some said 30, and one, you know, we got some big swinging guys out there, right? I've got some guys that are like, when I do a Viper trade, they come up with something similar and they'll do 500 contracts when I'm doing 10. I mean, there's some big guys we have in our accounts or in our database. I mean, and we purposely picked $100,000 because it can be broken down into $10,000 multiples. And I do typically 10 contracts per trade on 100,000 account. So if somebody had a $30,000 account, they do 3 contracts. It becomes very easy to extrapolate how it would apply to you that way. But again, don't copy our trades. It's for education purposes only. Go on.
Jeff said, what would the pot's bread and butter trades, top 2 or 3? I'd say risk reversals, rolling thunders, and maybe vipers.
Yeah, I would say that's pretty accurate. I mean, right now, I used to have like BWBs in there, but right now the skew in these indexes is all messed up where you can't get a good BWB on for a decent separation between the strikes. And so I've been backing off. And especially like when I saw you out in Florida, Tom, right? I wanted to put on BWDs for downside hedges, but because of the skew and lack of fear, I couldn't get on a 2-day BWB with $10 separation between the strikes. And I'm not going to go $5 separation on the strikes in a BWB and the SPX when we can blow through 7 strikes in a day in a big day. So I backed off from them. When things are normal again, I love BWBs and their derivatives, you know, unbalanced condors and that sort of thing. I'll be going back into those. But I would say you nailed it on the head with, you know, Viper, Rolling Thunders, risk reversals, at least at this given time.
Yeah. And then Rick asks, are the alerts coming from me or from Scott? Well, there are Scott's trades. We have to figure out the mechanism, and I'm probably work with Glenda on that. The emails will come from Scott, but we can probably figure out something like, I know you guys send out text alerts, and we do too, but we also push it to Slack. So we'll figure it out.
Yeah. I mean, it'll come out at about the same time, regardless of what process. It'll go into email and a text alert.
Yep.
And if then, you want the text alert, yeah, go on.
And then Klaus Peter, would it be possible to post the text of the questions not appearing in the chat window after the webinar? Yeah, sure, I can do that. I'll save the chat and post it with the recording. And believe it or not, I think that's the end of the questions. Somebody asked about the offer. It's like, well, there is no offer today because it's a free, we're going to do a free month. So there's nothing to pay today. Just sign up and see if you like it.
Well, you know, I love it when people want to give us money and I refuse to take it.
And we want to make sure it's right for you. You don't want to just take your money and say, oh, this really isn't for me. So, yeah, I think that's it. We usually go an hour, so hour and a half, a little over, but, you know, that's normal for a pot class, right?
You know, I got out of control. I mean, it was supposed to be 90 minutes and then questions would come in and it would take me on a tangent. And then all of a sudden, I'm like, would be teaching a separate topic that would take me an extra 30 minutes. So I'm like, and then all of a sudden the class is going to 2 hours. And then on complicated things, people say, you know what, I would break it into 2 classes, but people would then get confused and say, you know what, you did part A last week and part B this week, but I forgot what you taught last week, so we can start over. So then I pushed it out to just forcing it all into a 3-hour class in one night. And I always joke around, well, it's a 90-minute class. You got 3 hours. I'm not going to charge you anymore. Right. But I'm trying to get a little bit more disciplined. And I'd say most of the time we're right around 90 minutes, maybe a couple minutes over.
Yeah, it's pretty close.
Yeah. I mean, so I'm not going to cut things off short if people got questions or are lost. I want to make sure you understand the topic. And if you got to log out, it's no big deal because it's recorded. You can go back.
Right.
Or if you fell asleep, you can, when you're alert again in the morning, you can go back and listen to what you missed.
Right. All right, Scott. Well, it's a marathon, but I think we got everybody's questions answered. Most people are already on the list for the start. I guess we're starting Monday, maybe Sunday night if you send a message out.
Right. Right. I want to thank my crew who helped me out on this a lot, but mostly Tom is unbelievably proactive. I've never seen anybody in this industry as like proactive and hardworking as Tom and help make this easy. So thanks a lot, Tom.
I appreciate it. And I guess that's it. So we'll wrap it up. I'll get the recording posted as soon as I can, and we'll start soon, Sunday night or Monday for the trades.
Yeah,
And
well, actually, you know what? What I'll do is I'll I'll send an email out Sunday night. Maybe this. I mean, we didn't talk about this, but what if I send an email out Sunday night and people don't get it? You know, by Monday morning, they know that there's a glitch. So, but with a little bit of an explanation of what to expect, a
that's
little welcome letter.
that's fine. And I'll also post that on the class overview page. And just so you know, there are forums. I know not everybody uses forums, but I've got a special forum for profit and loss spreadsheets where I'm actually putting the P&L spreadsheets that Scott gives. So you don't have to go searching for them. They're all in a forum, easy to get to. So that's a nice benefit.
Cool.
All right. So thanks again, Scott. Really appreciate it. Looking forward to this new adventure, and I'm sure everybody will enjoy it.
Thanks a lot, Tom, and great questions, guys. I'm impressed with the questions that came in, and you've got a pretty sophisticated group of people.
Yeah, they're all pretty good.
Yeah.
All right. Well, thanks, everyone. We will see you next time.
Thank
Have
you.
a great weekend.